Yo, what's up, traders? Welcome to today's video. Today, I want to talk about mastering patience in trading. And without wasting time, I want us to talk about, first of all, why patience is hard. We have this issue of fear of missing out, FOMO, which I'm very aware most of you have gone through this. Now, in FOMO, this is how a trader think. A trader thinks like, what if I miss this move? But now, when you accept the concept that you don't even have to trade every day in trading, that is the like a whole new world is gonna open up to you. Because why do you have to trade every day? Why? Because the amount of money that trade offers or trading offers, you cannot even compare it with the salary that you know some people earn annually. So it's just in one of the other. It's just greed in most of the time, whereby traders think that they have to, never miss a move. But also these factors are also influenced by childhood, upbringing, and traumas. And another thing that makes patience so hard is the need for action, whereby staying still, the need for action, most of the time staying still or being still always feels wrong. Because you take trading, trading feels like work. So being still, you just feel like it's wrong. You have to do something. And that need for action, you end up taking unplanned trades. You end up taking setups that does not meet, the characteristics of the trade setups you're supposed to be taking. And these are some of the reasons why patience is that once you understand what makes this patience hard and you start working on them, that is the soul. That is the core foundation of us, solving these issues one after the other. Then we also have the bigger one. This one, the ego factor, the ego, and also we have also greed. Yeah, ego. Let's say ego and greed. Ego and greed. Now, this is a very big factor because you see, ego is something that I think all our lives at some point we literally don't like losing money, and we always want to prove a point, right, and quickly. So whenever we lose, you want to prove to these markets that I know how to trade. I'm gonna get back in there and get back my money. That is ego and greed. Traders, unless we outline these things and we take notes of them, I know that every day when you're stepping into the markets, you have to be aware, you have to be ready that how to deal with these situations. You will keep on repeating them over and over. Now, when we look on the other side, I want us to talk about forms of patience in trading. These are the forms of patience in trading. So first of all, the setups, we're going to be waiting for high probability setups. Now, don't chase every trade. Mastery comes from letting the markets come to you. It's not about having to take every setup. Actually, you don't really literally don't even have to trade every day, because this is the most rewarding career out there, even than any other career, because what you make here in a single trade covers what somebody else make annually. So setups, you gotta wait for high probability setups. That is the one of the forms of patience in trading. Then also we have patience in execution, whereby once in a trade, you need to avoid the urge to close too soon, or just out of fear, because you feel like it's gonna reverse on you. I think these things have happened to almost every trader. Every trader, at some point, you feel like this market is gonna reverse on you, so you wanna close too soon. Then later on, just find that this trade went on ahead and hit your take profit, and your fear cost you that winning trade. So this is patience in execution. These are forms of patience in trading. And also, what you can do, in scenario whereby you often want to close early, is just trust your plan. Just trust your plan, because you have a stop loss in place, you have a take profit in place. Those are your shield, and those are enough. Once you have them in place, don't care about what happens next. Just let it go. And last time we talk about patience in growth. You see, Majority of us traders, we often go to social media and see what other traders post there, and we often want to live that life. We often want to be like them, and which is fine. But the problem is that the trader you seeing posting that, for example, that payout, or maybe that they passed maybe in a few days, or maybe just in a single trade. You don't know how long these people have been trading. And you see, the problem is that majority of traders out there, they don't tell you how exactly they did it. They just show you, yo guys, I just passed I just received this payout, but they don't tell you the real struggles that they've been going through behind it. And you see, that's the hypocrisy side of it. A lot of people out there are faking it, and you guys are all believing it and thinking that maybe it's easy. I tell you guys, it's an issue of compounding. Now, when talk about compounding, compounding works over months and years. It's not something that it's not something that you calculate in forms of hours or days. Compounding is an issue of months and years. The trader you're seeing out there posting their payout, those guys have been struggling for 5 years, 10 years, 6 years, 3 years. But you've been here for maybe 1 year or 2 years or maybe a couple of months and already, like you want to compete with them. They have that compounding nature in their trading. They have that experience which you lack. So don't be fooled by, whatever that glitters on social media. You have to embrace the compounding side of it. And also, when talking about patience and growth, you need to understand that a trader who focuses on growth will always end up forcing trades, because if you're focused on growth so much that you always want to make money, guys, I've done these things, believe me or not. There was a time I was good, like after receiving a couple of payouts, I feel like, yo, I'm now untouchable. Like these guys got nothing on me, and I started now forcing, no, I started forcing my growth because now I wanted to play in the big leagues. These markets humbled me big time, I tell you guys. I lost a lot of funding, I lost a lot of money, almost like everything. Like, not almost actually, I literally lost everything in just a matter of a couple of months. And I kept on questioning, like, why? Like, how comes? I was so good. I was like, I was one of the best guys. I would enter these markets and pass a pro farm challenge within a single trade with not even more than 1% risk. I've never risked more than 1%. Just one trade, I already tap 8%. Then the next maybe session or even next day, phase two done, and I'm funded. After I'm funded, I would take 4 days to even get around 13% returns and wait for payout. Just 4 days. I have done that. And you see, that's the moment I started feeling like, you know what? I'm not untouchable. And you see, I was passing pro farm challenges back to back, payout back to back. Then I started focusing so much on growth and I forgotten the issue of compounding. The only thing that happened during those days that I was winning a lot is that the market conditions were good. And when the market conditions are good, perfect, you're going to be winning, you're going to be making money and so on. And also, apart from that, I was so strict to the rules and so on. But I see the brain, the way it works, we tend to often forget ourselves along the process. We often tend to, lose ourselves when we're in this chat. So that being said, I want us to talk about practical exercises that can build patience. So first of all, we're going to be talking about the setup rule. The first practical exercise, we're going to be talking about the setup rule. Speaking about these things, guys, I'm aware that majority of you traders don't even have these things. You don't trade based on them, and this is why I say that write notes, take notes, and look at them later on before you enter trade. So the second practical exercise we're going to be talking about is the timer method. The timer method. These things are here to help you as a trader. And the third one we're going to be talking about screenshots. Screenshot journal. I think by now you've had a lot of people talking about, they used to they used to print a lot of they used to print a lot of their, how do you call it, their their trades, especially the winning ones, and they would just look at them, and I've seen a lot of even CEOs of big pro firms, saying that what made them profitable was, just taking screenshots of those screenshots. So let's talk about the practical exercise to build patience. So the first one we're gonna be discussing is the three setup rule. So commit to trading only 2 to 3 high quality setups a day or a week, and this will force you to wait. You will have no other option. You will have no other option but wait. It's hard, I know. It's very very crazy because waiting, like, maybe some days you wait the whole day, no setup. The next day, no setup, and at some point you're gonna feel bored. You're gonna feel impulsive, and but this is how this is the practical way to exercise how to build patience. Because you see, over time, when you keep doing this thing, it kind of builds up, the psychological muscles. And we also have now the timer method. Now you see, during the timer method, before taking a trade, you need to set up like maybe a 3 minutes a timer, or maybe 2 minutes. Now, if after those 2 minutes the trade still fits in your plan, then execute. I know this is crazy, but yeah, the timer method. Once a trade is within your entry spot, just wait. Set a 2 minutes timer. Then, if those 2 minutes this trade still fits your execution or your plan, execute it. This one will help you with the issue of fear of missing out, whereby you always, take random trades, based on thinking that the trade is gonna deliver before, tapping you in. And literally, this is a game changer. If you can try, like the timer method. Then also we have the screenshot journal. Now, whereby you're gonna be capturing charts where you are tempted but didn't trade, but also capturing the trades that work in your screenshot journal. This was this what was I was talking about earlier, about, when you start seeing your setup, even even in just pictures of the screenshots of the trade, especially the winning ones. But also, on the other hand, I'm talking about, capturing charts where you are tempted but didn't trade, and over time review, see how many would have been losses. Now this will build confidence in trading, because you see, when you're tempted into taking a setup that does not really fit into your strategy, and instead of taking the setup you just screenshot it, then over time you start seeing how many times you've really 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 saved your money through, like you've saved money by not taking those silly trades. You'll realize that it will build your confidence in trading. Guys, these are the 5 practical exercises to build patience. And as usual, I don't often like making my videos too long. uh, I always go with around 15 minutes so that I don't really overload with information. And that being said, I think we're gonna be, ending it here. And I'm gonna be doing another video about institutional market order flow. And until then, even as well as overview of what really happened last week in maybe the Nasdaq, and as well as gold. And because on Friday I did not make any video, I was kind of busy, I was kind of held up, and I'm gonna do one to compensate for that, just to give an overlook of what's really happening, because everything happened exactly last week as I've told you guys. And as much as well as the price action was not really what I expected it to be up here, we're gonna be discussing that in the next video on Nasdaq. And that being said, cheers, see you in the next one. And make sure to share this content with somebody who need it.